All right, can you hear me? We are just pausing the music because we are gonna share a little bit the Traders on the Squawk show, completely for free. The only thing is you have to sign up, um, and then you can watch the transmission. Let me just tell you why we're doing this because currently we are breaking important levels on the stock market, and that is a very bad signal actually for the entire market. The reason why we are also posting the music is because the idea is trying to share obviously this video, and for copyrights permissions we're just allowed to put all that music only on our website, not sharing it, for example, to YouTube. Right. So I'm just gonna make a little briefing with people that we have been uh, talking earlier about obviously what we are expecting for the day. But our big concern is actually now the levels of the S&P 500 and the Nasdaq and Dow Jones. So I'm going to show you a little bit. Currently, the S&P 500 is dropping as much as 1.31%, and even a little bit more. The main reason why is so a key level. Let me show you then on the charts right here. We have the level of 3,854.20, which is one of the key level, and a little bit weak, but it's the key level anyway, to hold the price. We already see that it's not actually able to do it. This is the 5-minute charts anyway. So if we move anyway to the 1 hour chart, you will realize that that level, it is working as a support, but we had the resistance level that probably last week and also yesterday we discussed about, and we just spent a little bit of time talking about how important was the 3,901.63. The main reason for it is because that was a very strong level. The the next one actually, and that was the buying setup, was the 3,864.04. That actually it was already smashing, as you can say, right? So then anyway it was rejected and then going back again to that 3,901, and that means that is working now as a resistance. That's why it was so important yesterday to read the post from Wild Cream Life, because, not being funny, but this is exactly the right time if we decide if we are going lower or if we are just trying to save the economy. And this is quite important because we are not talking about just saving the stock market or just the S&P 500. No, no, no. This is just actually quite bigger anyway, right? Um, the reason is very simple. The economy is not strong enough to hold actually another, for example, 20 or 40% uh, of a crash. If we have a crash around more than 20%, again, let me tell you, forget about your job, forget about uh, probably your house, your mortgage. Uh, we're going to be literally living through hell. So that's a complete, I'm not trying to panic you, but it's the reality. Uh, Actually, we're completely upset with this because this is trading anyway. We can short and we can buy, we can short some stocks and then we can take some profits. But the idea about this anyway, if it is happening exactly what it is currently happening now, we could be completely wiped out, right? Just let me tell you anyway. I share Uniper confirms talks on AAD 8, including EU 8 billions capital increase. Just in case if you're keen on it, um, I'm not so keen on it anyway. But I just I gotta share that news with you. So the importance over here is, first of all, we have the S&P 500 breaking this level. I'm gonna just make a zoom out, or just let me go to the 1 day chart, and you will realize what is exactly what we are expecting for this. One of the Let me just change to the bars, and then you can realize a little bit better. One of the keys that actually was missed, and that was an important level actually, it was this yellow line, as you can see here, that it means 4,383, right? 4,383 level. That was a very important level to respect on the S&P 500. That didn't happen actually. We missed it. So what is probably happening here is, if this is dropping, then the drop is actually quite worst, right? One of the other thing is, right, if we miss that chance, right, for example, to pull the trigger, short in that position, it's not a bad idea, obviously. Let me just show you here. It's not a bad idea pulling the trigger, right? The problem is, what about the support line? Where are the bears? Where are the bulls? Well, bears obviously took this action around the 4,300, and then with that idea, it means that it could go actually to the 3,516. And here's the key, because the level for bulls, and this is not for I'm just saying for bulls, because I don't want to say that, for example, pro traders or pro investor anyway, and hedge funds. That's the main reason why we are so accurate with this, because we are seeing exactly the other way around. We are seeing and trading exactly how hedge funds, and that's our model anyway, quants. So, and the quant model is telling us that this is actually the time to buy or time to sell, right? So when these all big players are coming in, right, pulling the trigger around that area, around that level of 4,300, right, what they are doing is expecting to go, actually the real target for them is actually 3,516, right? If they are actually coming to the 4,338, that means that the real target for them is around the 3,700, and then they can go actually for extension, go to the 3,385. So this is quite important, because if we are just taking the measure between the top and the bottom anyway, of that extension, we are talking about almost 30% of a drop, right? If you're already in the market, it's fine, but let me tell you, it's time to get out of the casino, just like that. It's pretty simple. It's time really to get out of the casino and take your money. Actually, just do not waste your money, and do not actually risk for something that you don't know, if you don't know what you're doing, right? If you think that you that you know what you're doing, let me tell you, probably you're also wrong. Why am I telling you? Because this is very simple to me, that I know what they are doing, I know how this is working, but also I know what's the last idea, and the last idea I cannot share it with you, right? But it's something that it's quite big, right? That's why it's so important this time, exactly this day, today, yesterday, last Friday, I've said, watch out, because we have to save the next week, right? The next week is this, right? Expecting that probably the Fed is going to go with a supersized hike rate, which is probably a must anyway. But the thing is, if they are doing it, right, if they are doing it, it's pretty good actually for the US dollar. So if you want to make a bet, then do it then. But over here, the US market, let me tell you, just try to think like the big one or a smart one, a smart investor, for example. Um, are you thinking that with 8.3 rate inflation in the US, are we able to make new highs? It doesn't make sense to you? Well, that's it. It makes not, right? So in that way, if you're not thinking like, well, anyway, it could go even higher, probably because the market anyway it can remain irrational longer than you can stay. You can remain um, solvent. Well, it's fine, but that is a bet, and that's my point, and that's why. With all my years of experience, I do prefer to tell you the truth. I'm trying to be honest with you, and that's why it's so important to take a look to the big picture. Try to be like an artist. If you are painting your masterpiece, right? Sometimes you have to retreat. You have to go back a little bit, just step away a bit, and see the big picture, how it is doing it, right? Well, that's why it's so important actually to see the big picture over here, and the big picture actually doesn't look good. Um, I know that most of probably experts and even CEOs that they are telling you, yeah, well, it's not coming to recession. Let me tell you, it doesn't matter actually what is really telling you or not. The thing is, how is the market perceiving it? And the market is a genius, right? Market is smart. Market can show you exactly what is going on out there. So simple as that. But for the other way around, it's so important to consider that the market also is moving, and it's moved for these days also by quants. That's no excuse, but also because investors are actually considering as the thermometer. For example, they are taking the temperature to see what is doing, what is happening, how is this thing developing, and that's the real point at the end of the day. Markets actually could show you something, and that's why sometimes you're going to have losses because the market is not doing what you're expecting. Even if you are the god of trading, it doesn't matter, right? Because market is the genius. So simple as that. It's smart, right? And can do whatever they want. It doesn't matter. The market actually is able to do that. So it's represented at the end of the day is the contact point between buyers and sellers. That's it, right? But that's the thing. Who's buying? Who's selling? Look, for example, let me just change the candles anyway, and you will realize what I'm talking about. Well, with, for example, seeing this kind of drops over here, this was June. Uh, big candles moving down, but just try to realize and compare the size and compare actually the structure that the red candles that you can see over here. Let me just make a zoom, and then it's better. Um, Compare with the green candles, right? So when we are seeing these big candles, the problem that we see is, right, this is actually a massive sell-off. No, it's not a massive sell-off. But the thing is, the number of orders are just a few, but with a big amount of money, right? Big size of money. And actually for this day, the model, the quant, is actually telling you right away and executing the order by instant. So it's no time actually to lose. The other side that is buying, as you can see, the green candles, they are so actually like cautious because I'm just trying to go there. I'm just trying and trying, but at the end, it's tripping, right? So that's why it's so important to consider the current time and the current level that we are living through. It's not an easy thing. Um, Over here, the S&P 500 at least, I'm telling you, it's the key to say if this week we are trying to save the week and probably the month, or we are actually just messing around and we're just going to be completely wiped out, right? I do have positions anyway on the S&P 500. I'm not going to lie you. Um, and actually my positions are taken very long time ago, right? If you're trading just day by day, let me tell you that yeah, you have chances to make money, but be careful because this time is not a simple time for retail traders to realize what really the market is doing. This is not about actually the 200-day moving average or the 50-day moving average. Forget about that. That's just crap. That's useless. What is really important is the price action for one side, and the at the end the quant model. That's it. Just that. That's why, for example, one of the trading courses made by Cream Life is actually based on quant, qualitative, and fundamental and technical. So you have four factors, different factors, to get in to then pull the trigger. So if you're not able actually to do that kind of things, probably you're going to lose. So well, over here we have these very key important levels of the S&P 500 that actually now if you're seeing the daily chart, and as you can see we have the green and we are still able to save the S&P, but also we are still able to save the wick and the market. So if we move then to the 4 hours, let me just tell you, we are crossing this line. You know, how important it is if today we are closing below the last level, we are considering then to pull the trigger to the downside, but also it's complicated because you're betting against you. You're making a bet against yourself at the end. That's it. Why? Because you're part of the economy, right? And this time, because we are in a very good shape, probably compared with other countries, but let me tell you, this is going to spread out everywhere, right? And here's the next problem. Let me go to the U.S. 10-year yield. That is, well, exactly as we probably expected, and you already know that last week. This is just going higher and higher, right? There's no any chance to see the other way around. Over here, I don't know if you can just realize what I was doing over here on this chart, but the way how we see the charts, it's a different way, right? The main reason for it is because we just trying to not predict, but also we are just trying to be one step further to what the market is doing. In that way, we can just realize that the market is exactly the same time that we are, right? We are actually in the same path or parallel path. So that's why we are just trying to chase that exactly the same goal of the market. Over here is important because now with a US 10-year yield over 3.5, that if you can just try to consider this, last time it was actually 3.497, and this time is the maximum level. The highest level was 3.593. What actually is showing you then that if we are just trying to see the big picture, let me just go back then to 1 month, and then you will realize this is one of the greatest key to already know what to expect. This is one of the keys actually to realize what really happened, for example, in 2018 and what really happened in 2008. This time, right, it's getting completely inverted to the other way around, as you can see. That means the appetite that investors are having for it. But just try to remind you, this is also stepping on what we call it the greatest risk ever. If I make the zoom out, you will realize that, well, the last data that we had, or since, it was the 80s, right? That was 79. And then the last one is today. But the last one that really we got over here, and that was the biggest signal to see that it's going to crash everything, and that's why everything is just getting so awful, and I don't like it, is exactly when everything was broke in 2020. Right, you can argue that, well, it's obvious, pretty obvious, because of the COVID-19. Perfect, no problem with that. But the thing is, one of the things that it calls my attention anyway, by far, is how this is moving so fast, because probably you're not trading this, right? And probably retail traders not actually taking positions on this, right? Most of you are just going to the risky asset like stocks or even indexes or Forex market. But this is actually, most of the time, and that's a priority for them, this is actually from banks and big whales, right? So this is not actually something like, oh yeah, but they're just trying to cover. Or, no, this is not actually trying to cover. What they are doing actually is moving the market. That's their real reason. They are not, when they're going out, for example, for euros or dollars, they're not going to, because I just want to possess the euro or the dollar, or just want to accumulate or store it. Just no. It's just about moving the market. So, well, anyway, that's why it's so important, that one. The other one that it's called actually your attention probably, and that's it's gonna call my attention obviously, is the dollar yen, and that's why we have, up to now, we have two different assets, and now I'm gonna show you the third with the dollar yen. That is one of the safest by far, actually, and by excellence. Yen is usually one of the greatest currencies, not just for trading, but also as a safe haven asset. And this time, it's actually completely drilled. So let me just go then to the big picture over here, because one of the key levels to me, it's actually 157. But not being funny, but this could go even actually higher, up to up. Well, you know that, not because I've said it's gonna be like that, right? But the main reason for it is to actually so high is because, well, for one side you have that it's very weak compared to the dollar. If we are just rising this interest rate, it's pretty obvious that we're gonna get a stronger dollar. And then just get out of me, just get out of the yen, because I don't want to be there. It's a very mundane economy, right? It's a very not tiny economy, but not actually the big one or so excited, right? So then it's like, just take me out of here and then take me to the dollar. That's why this is actually even awful, because, right, if you're not having actually the yen, then just tell me another by excellence what is the safe haven asset. And then we jump to the next one, which is gold. And gold is just telling us that it's also dropping, is falling. Let me just move to the daily, and then you will realize, when the goal already crossed the key level of 1683, right? Then it's like, well, it's just losing its momentum, but also it's not just doing it because for nothing. It's because there are people out there that, for example, if you're outside, right, overseas, it's more complicated to get to buy dollar for the simple reason that they have to go first to buy dollars. In- So in that way, they are able to buy gold. So they're going to buy dollar to get gold, and it's more expensive. But also, then you have the other side that is physical gold. And well, obviously, we already made a research about the gold, about the physical gold, and it actually calls our attention that more people every single month, um, from at least the last one, 2021, are starting actually to accumulate and storage real gold, physical gold, which is pretty good actually. I'm agree with that idea. But again, if they are just buying it physical, what's going on with the paper, right? Anyway, I'm going to share this. This is not actually something completely bad for you. This one of the ideas that we shared, I don't know, like 2 months or 3 months ago, I don't know, about the gold. Why it's not shining the gold, and the main reason why it's not shining it was because of that, right? Also because when big investors are just trying to realize what's really going on out there, I do prefer to have cash in my pocket, right? Instead going out and risking that money. So even if I have gold, and obviously I'm quite happy because, well, I already got the profit, I already made a good profit, then I just, why am I going to be still there, right? I just liquidate my money, and then I just have the cash in order to go out and then purchase more stuff, right? The big opportunities that are that probably they are thinking that it's coming, and it's, well, probably it is, right? We are gonna have opportunities, a lot of them, right? And obviously, if you have cash, then you are able to negotiate better, or actually to have better deals, or buy more expensive things but at a better price. So it's actually a win for any side that you see. The problem anyway is the inflation, right? With 8.3 rate inflation year over year, uh, it doesn't look like a good deal, right? But you already know that we are still rising the interest rate, and we have to do it anyway because it's completely out of control. I have my theory, but I'm going to share it then. Well, I've already shared it actually, but then I do prefer to do it for free, probably this week. And here we're gonna just jump again to the Dow Jones, to the um, stock market, because it's getting quite bad. If you see, for example, my key level of the 3,000 and sorry, 3,795, you will realize that it's breaking it. Already did it. That happened, and that means that it could go even lower. Where is it going now? Well, obviously, it's gonna go to the last point of 29,914. So watch out, because if you are trying to make a buy, it's not maybe the best time to do it. Well, anyway, I'm just gonna try to share with you anyway the what I've shared obviously, and discuss this with the other people from the recommendations that we had today. Um, we had the Change Healthcare Incorporation that with Piper Sandler cut the rating to neutral from overweight. Oxford Industries, Piper Sandler, Verizon. Why am I following Piper Sandler anyway? Because we are pretty a similar formation with them, um, just in case. So it's something that it's it could call your attention, by the way. The rating that they are doing is pretty good, actually, pretty decent. Um, and just now, just in case if you have some question, or if you are keen on any asset that you want to see, please let me know. Um, I'm gonna go with the last one that I'm keen on, and anyway, as usual, is actually the US dollar index. We have this asset that also is waiting actually for the FONC meeting that we have, the um, Federal Open Market Committee that we have tomorrow, and that's going to be at 2 p.m. Eastern Time. So just in case, um, if you're gonna try to consider to buy the dollar, it looks complicated actually. It could go higher, but not actually with the right at the right time, right? So be careful with that. Most of the time, investors are, or at least smart traders, what they are doing is taking the positions before. So in that way, when the news are coming out, then we get the momentum, and then we can just take some profits and then get out, right, with your money. Um, well, what are we really expecting on the dollar index for today? We are actually seeing it within 2 days going to our target of 110.369. That level is quite important actually to us, because it's one of the keys that if is telling us that I'm gonna break and make new fresh high, as long as we can just hold that position with interest rate that it's coming in, right? If they are, for example, now just try to consider this anyway, 75 basis points, it's actually a must, right? But just keep in mind anyway that we are forcing, and all the interest rate decisions that the Federal Reserve is doing, all of them are lagged, right? All of them are completely lagged. Why? Because they are lagging like around 90 days, right? So now all these rates that we're gonna go, we are taking, right? It's gonna really have effect in 2023. At that time, that's the problem. The economy could be so weak that it's not able actually to hold more pressure, and that's why we have a massive problems. Also, we have a problem of liquidation. The Federal Reserve already talked about this, and actually they 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 said about reducing their balance sheet, right? Because if they are reducing the balance sheet, then they're gonna have, like, as a result, that I'm completely disagree with it, right? But then it's like, if we just reduce, for example, $2 trillion, and this is the study that they did. uh, if we reduce the balance sheet in $2 trillion, then that means 27 times the interest rate. Uh, so it, it looks like a joke, and it looks like, really, to me, it's more likely. Well, anyway, this is the dollar index. I don't know if you're on something else. I just wanted to share actually that idea about the S&P 500, that actually well, not just the S&P, but the equity market, that it's quite complicated at this time. Hopefully we can save the day and the week, and that's why we are just trying to be a little bit active on it, because if we just try to save the day and the week, then we're at least taking some air, and then probably extend this uh, good, well, not good, but at least uh, a good result at the end for the entire economy in the US. Um, that's it. One of the other things is S&P 500. Now these level, we're going to be covering anyway the entire day. Um, we are still actually have that chance to save the day. But that's why I just wanted to warn about this is getting awful and this is getting complicated. So if you want to pull the trigger, then you have to know that you're gambling, right? This is a completely risky bet that you're doing. Um, this is actually a very key, important key level to get in. But then, I mean, for a buying position, if you want to know, the problem is that it's good actually to take that risk if you know that everything you will actually go to your favor. This time, our models are suggesting that it could go higher in the um, uh, 1 hour chart, right? Going again to the 3,901 and actually going to the trend line, that is this red line, that if I just make a zoom out, then you will realize what I'm talking. It's this, right? But it's quite impossible to see it even higher, right? So the odds are in the negative side. So just in case, if you want to know more, stay tuned, because definitely this is something that it's gonna get even scarier. Well, I think that that's it. No one else with more questions? Someone? By the way, just in case, what we like actually to do every single time on Traders in the Squawk is trying to check the price target, the downgrading rating that the big ones are doing, and in that way, we can help you to improve your trading. Nope. Perfect. Thank you. And for the people who's actually just watching for free, well, perfect. Good for you. Um, if you want, just in case, what you can do also is just um, probably you don't have actually access to any chat with us. I don't think so. Don't remember. But then you can do it actually through Twitter, or maybe that's better. For people who's actually on Discord, the golden members, fine. If you don't have any question, let's do it then. We are have just 8 minutes away, so let me go then with the upgrading ratings that we had today. There was AMX from UBS. So let me go to the AMX. UBS upgraded to buy from neutral with a price target of 20. Um, I'm not sure if that's gonna work anyway properly. Um, let me go to 1 day. Yeah, it could actually $20 like around here. So then we have, that was UBS, but I'm not sure, because yeah, there it is. Morgan Stanley. Let me go to HUM, which is Humana. This was completely upgraded to overweight from equal weight with a price target of 549. Look this. One of the best strategies by far on this kind of stocks is just buy and hold. So simple as that, right? The problem is when we have this kind of stocks, when we have a crash or we have a major correction, then everything goes to hell. But anyway, it looks pretty nice. Sorry. Pretty decent, around 513.43. This is, I mean, obviously just trying to tell us that we're going to see any retraction at any time. So be careful with that. So I'm not sure if the 549 it's gonna work, or probably it's not gonna work. But that was from Morgan Stanley anyway. Last one, MLM, Martin Marietta Materials. Um, this is important. This is actually, you will realize why we had this, because we already put this, and actually that's why most of the time we are completely right. MLM Exane upgrades to outperform from neutral with a price target of 407. Right. So 407, it's going to be like around here. Same number, right? Yeah. Particularly is exactly the same. So no any change on it. Right? Then why is we're having this? Because we projected to see a drop, obviously, on this and this is stock MLM. This is the weekly chart, by the way. So if we move to the daily, you will realize a little bit better what we really thought about. That was exactly our target. It was representing like we're gonna risk just a little bit with a stop loss around the 354, and then we took that position going through 317, and it worked properly anyway. That's the minimum, by the way, right? That's the minimum. We are knocking on it to take some positions. Just what we are risking at the end is just move your stop loss. That's it, and then try to squeeze at maximum your profit. So this is this really has the chance to go to the 407, but then not before coming to the level a little bit lower, I think. Probably we're gonna see this. Yeah, definitely we are just seeing how this is going even lower. Right. That was MLM. Let me go with the next one, which is the last one. This is by CHNG. All of them already were covered earlier, but because we're just trying to jump in for free, that just for a few, well, fine. Which is this was completely pending. This is 27 now currently, and actually Paper Sandler downgraded to neutral from overweight with a price target of 27.75. So it makes no sense. We're knocking on it. Forget about it. And that was the last one with WY. Right, but Bank of America security is downgraded to neutral from buy with a price target of 38. Currently now at 29.92. Obviously, as long as you are... Ooh, no, it doesn't look even worse than I thought. Nah, forget about this. This could go even lower to 28. So Bank of America, not doing it well. Right, we have some news. Let me just tell you. because we have OPEC plus supply shortfall now stands at 3.5% of global oil demand, Reuters says. Let me go then to oil, use oil. To US oil, exactly to our level, perfect. Here we have it set up, by the way. Well, about the news about OPEC plus supply shortfall now stands at 3.5 of global oil demand, saying that now producing below its target by a record of 3.58 million barrels per day, about 3.5% of global demand, highlighting underlying tight supply in the oil market, even as recession fears drag oil prices lower. Data from the Organization of the Petroleum Exporting Countries on allies led by Russia showed the group known as OPEC Plus showed that shortfall in August, which stood at more than OPEC number 3 producer. The UAE's output was a record and 24% higher than July's 2.89 million barrel per day in July. Right. This is important anyway, because if we consider just, let me just show you over here. I don't remember why I do have this line, but we had, not being funny, $92, yeah, like 3 weeks ago only. So over $90 September 9 and then September 14, which is probably signaling then that it could go to the next level of 75, but I do not realize that anyway up to now. No, not exactly at that point. Just try to remember anyway, the US President Joe Biden already said that is he already signed the order to buy oil at $80. 80. Why? Because, well, to refill the reserves. But then when he did that, the price already went up. So I don't know if he can accomplish it. Well, that's it then. That's it. I think we're done anyway. Any question? Any one of you? Nope. Yep. Exactly. The position on the US oil? No, but I'm gonna share that. Not here. I can do it later, yeah. Perfect. So we're just gonna keep with the music, and that's it of the free section of the day. Hopefully we're gonna be able to save the week. The result anyway is just trying to, let me go back anyway to the S&P. Go back at least to this area around the 3,864. If we're above that level, we're completely safe, right? On the S&P 500. That's it. For example, now, if this candle is close, and probably it's going to close around that area anyway, but the previous one, which is that was 4 minutes ago, the red one, it respected that area, that level. Okay, so now is able actually to go higher, um, but then you know I gotta give you that recommendation anyway. But then it's very simple. Then you have the chance. It's set up, by the way. It is, but it's a risky one, right? So one of the last call that I'm gonna make you anyway. If you don't know what you're doing, by far, just get out of the casino, walk away, take your money. Tickets is probably now, and this is a very good idea. Just try to go to something that it's going to be so profitable, um, and that's going to be water and seeds. Just try to see that. Well, that's it for the traders in Squawk. Today, oh, we have news coming in. No, not important. Absolutely irrelevant for the American market. So, okay, so stay tuned with the traders in Squawk. That's it, and stay tuned because we're gonna be covering anyway. And if we have something that it's gonna be alarming, then we're gonna call you again. So stay tuned. So well, that's it. Thank you.